So right away for ES, we're obviously going to see a large drop down and kind of attacking the sell side here left from the Asian session, and then yesterday's kind of mess that was left behind. So we all saw what happened yesterday. It was very much so back and forth and just not something that you really want to engage with. Honestly blows my mind that people are actually pushing a lot of buttons yesterday. So just goes to show the importance of knowing really when to trade and when not to. So a little bit of a turn of events here. I even had a alert set here just to alert me whenever ES crossed all-time high. So I had this alert up because as I was buying the NASDAQ here, okay, in the London session, which I think you guys all saw that by now, but as I was buying down here, right here, and I got covered the whole way up here above this buy side liquidity. I was looking to close the trade as soon as ES crossed all-time high, but ultimately did not. We see that both averages reached up for the high buy side liquidity and has failed to get there. So what I think this thing is going to do is, first of all, it's not going to drop down like this, okay, just to go back up right away. What I view this as is simply just price is going to drop down below all the lows here, meaning Friday's low as well, and then from there we'll look to accumulate all the sell stops down here to distribute them above the engineered highs now. So if things are going to act correctly, that's exactly what will take place, and that's what I'm looking for, obviously, going forward in this week. So with that said, we have 10 a.m. news driver out, so manipulation has been through the marketplace, and now we can reasonably look for actually pushing the button, because anything before this, in my opinion, I always say it's just gambling. Okay, so it drops down 9:30 opening range. Okay, so we have 9:30 open, slams up initially, and then trades down, comes back up for a gap, back and forth, back and forth. Now, here's the thing here. Okay, maybe you were a short seller here, but once we get to 10 a.m., everything becomes 50-50. Okay, I've seen a lot of different scenarios play out with the 10 a.m. news driver. So it could have opened, slammed up, took you out, and then went lower, or it could have shot higher, or it could have shot down. No one's predicting what a news driver is going to do. Okay, especially CPI, FOMC, and non-farm payroll. Okay, but if you hear me say this, you're like, oh, well, I can. Listen, there's no need for you to even want to strive to do that. It's not needed whatsoever to make a lot of money. So definitely, if you're in that mindset, do your best to kind of shift away from that. But anyway, yes, a very eerie day where GK the Trader is trading the London session for over 100 points. Now, that's the last time I'm going to mention it, because obviously we're in the New York session now, and that's done and dusted. So what I'm seeing now is 10 a.m. by default creating this Fairway gap. That is going to be our time-based imbalance, and we're ripping up through it here. And I want to see what we do from here. So I'm not going to jump in on anything right away. All right, I'm going to allow the market to show me its hand. And to be honest, I really only see a scenario for Model 3 playing out today. So I haven't actually released Model 3 out in the mentorship tab yet, but that certainly is coming October 1st, yes. And most of you have already know, are like, as soon as it releases, you're like, oh, okay, I know what he's talking about. Like, most of you already know what it is. Okay, I'm just setting out in stone and laying out all the rules for it. Okay, so you can reference it anytime you want and utilize it for your benefit. So notice that we reverted back to new week opening gap. Remember I said as long as we're in a consolidating nature of price, we're always going to revert like a magnet to new week opening gap. So as soon as we open out of the week, what do? Trade to it here, trade to it again, a third time. Okay, obviously we're consolidating. Then we rise up, invert right back down into it. So we're just right smack dab in the middle of the consolidation again, okay? Now, as for dollar index, a little bit problematic here because we're trading in the same direction. So until dollar index cleans up its act, it seems like I've been saying this too much lately, but until DXY cleans up its act, I'm not really considering it. Okay, it worked up, traded up into half of this daily wick here. Okay, we're creating a swing high and displacing in the direction of these daily lows here. Okay, but you guys know that we always try to frame something inversely on DXY, but DXY looks the same directionally as ES and NASDAQ, so it's not going to be too much of a help to me today. Okay, So pretty much from the 15-minute chart, like I said, like while I was like up in London session, by the way, you're asking, wait, what was this guy doing up at 3 a.m.? Well, my daughter woke me up with the crying and whatnot. Honestly, I went to go feed her, and I was like watching this drop down. I was like, maybe I should long this Ferrari gap right here. And then she started fussing, and then ended up feeding her a bottle. And by the time that bottle was done, like I come back and I'm like, all right, boom, here trades back down to the breaker. We have this hourly imbalance right here, and there we go. So, but anyway, what I'm trying to get at here is we extend beyond where you at new day opening gap. Okay, not much of a new day opening gap to be honest. So yeah. Anyway, we'll use midnight opening. So midnight opening, all we do is extend beyond that. Okay, we trade significantly beyond midnight opening above it. Take out internal buy side liquidity. Fail to get here, engineering these highs here. We're now creating intermittent term highs. So we have a swing high here, higher swing low to the left, or sorry, lower swing higher to the left, lower swing higher to the right. So this is market structure pointing its finger to the downside. And what do we have? Excuse me. What do we have on the opposing end? Sell side, and sell side. Okay, so yeah, pretty much everything I just said on NASDAQ just transposed out to ES. All right, so intermittent term high, displacement, market structure break, back below midnight opening again. Okay, trade below these internal lows that were left behind from yesterday's mess, and kind of eyes are just watching down here. All right, so I guess near term target would be here. Okay, so you guys already know the deal with this. This is a wick low. Okay, a lot of sell stops get jammed below these type of lows. So this is why this would be such an important level that I'm eyeing up. So let me go to NASDAQ. So rolled up into the 5-minute Ferrari gap. Remember, that's that first Ferrari gap formed after 10 a.m. And rolled past the up candle here, but notice where the bodies stay. Okay, the bodies stay right smack dab in the middle of the up candle here. Now, I would look to short this 5-minute Ferrari gap, but and you know, like it's right after the 10 a.m. news driver. We roll up, so I probably, if I would have shorted this, I realistically would have got covered at, let's just say 20,041. Stop loss would have to go above the 5-minute candle's high, and that's just, you know, that's like a 50 handle stop loss. So I'm just not I'm definitely not interested in having a 50 handle stop loss, not even on the micros. Okay, and I told you guys the deal with the micros. So you know, I'm actually not going to say anything else because I'm just going to put it in video format for you guys, just so you know, you guys can continuously reference it. All right, so like I said, all right, so we're leaving behind a 5-minute wick. We just worked in 25% and touched the very low at the 5-minute imbalance here. Okay, ES failed to get to that wick initially. Also note that we're going to be leaving behind a large 15-minute imbalance. So in about 12 minutes, this large 15-minute gap would be formed. So I would definitely prefer some type of run on the short-term high before I look to engage on a continuation, because I feel like, I know with these news drivers, when they plunge it down and it comes back up into a gap or whatnot, a lot of, you know, less informed, mostly ICT traders would like to short that, put their stop above, and then they, you know, a lot of times, you know, that's what we call I don't want to call it a trap, because, you know, they'll say bear trap, but that's just like based off the idea of selling and buying pressure, and I don't really particularly submit to that idea. But you know, at the end of the day, our beliefs don't really matter. It just matters, are you making money or not, right? But anyway, okay, we're rolling up into this up candle here. So this would be classified as a bearish order block. So we roll up, this candle takes us up into the original imbalance. We shift below it, create a Ferrari gap, and roll back up into it here. I would view that as a nice bearish order block. But like I said, I would really prefer some type of short-term high to be ran out before I look to engage. So realistically, could this thing just dump? Sure, yeah, it could dump on the continuation. And I'd be, oh man, like I missed out on that. No. There's 3 specific models I laid out for you guys. None of them fit the criteria here, and certainly doesn't fit my risk management plan. Okay, so I'll be looking to engage with the NASDAQ today. And like I said, I would have to open my stop loss up 50 handles, and I'm just simply not interested in that. So, most of the time, we wouldn't expect the upper quadrant to be working on this gap if we're expecting bearishness, right? Because we have this low here, so we create buy side of the curve, sell side of the curve. So from this low right here, extend that across to the low of this Fourier gap, okay? That is the real imbalance in price. So we have this low up to the 5-minute Fourier gap high right here. This entire range, that's balanced. But even with that, we always still have a risk, particularly right around news drivers, for it to work up in that upper range and then wick off aggressively, okay? Now on the opposing end, what could we look at? Well, we wicked down, took internal sell-side liquidity. We're working in half of this wick here. And, like I said, I would like to see some type of short-term hybrid right now. And looking at an ES, exact same thing, except we just fell shy of new week opening gap high again and worked in the upper 75% of the wick. So another thing I want everyone to take note of is, should we rally back up in here, this Fourier gap will be important. So just like how we view the time-based gap from the opening range, same exact thing with midnight opening. Here's the first gap formed out of that. It's a significant one, and we're going to continue to reference it as long as we're still trading through it. So with everything I was saying, once we dropped onto the 1-minute chart, would we ever trust this type of sensation as some type of high quality low being formed? No, absolutely not. Like if I was trying to frame a long position right now, I would always want these lows to be ran out first right here. So kind of what I'm looking at right now is like on a short-term basis, once these markets really open with the news rate, it drops down. A lot of people want to chase that, and as it rolls up here, a lot of people want to be on the opposing end right away. What do? They buy it. Where does their stop go? Right below these clean 1-minute lows. Now where does everyone's buy stop go on the opposing end for those that may be shorting on a continuation here? Right above this short-term high right here. So as it rises down into the sell stops here, okay, all their stops get trailed above this high here. Okay, so I don't need to see anyone else's chart to know this. So there we go, just flush lower. And notice what we did. I don't think we got up to the low here. Let me make sure. Okay, so we actually fell shy of the low. It didn't even entertain the balance range whatsoever, which is a plus for bearishness. But, you could say, okay, well, this is just classic support and resistance, which I think that would be valid, okay? But the only time I ever consider old lows as being significant when we roll up into them is when we have a Fourier gap. So if we don't have a Fourier gap here, I don't care about the old low, okay? So that's pretty much it on that. All right, so immediately wicking back up after taking the low there. Let's check out ES. Okay, ES has yet to take the low, so I'd like to see that continue to take the low. DXY is still primarily bearish. Dow being Dow, not doing anything. It's back and forth. I definitely would prefer to see NASDAQ just completely and entirely sweep this low here. Like I said, it comes down to like stacking up with all, like, I'll think back, like I can think off the top of my head because I've been doing this for years and years. I can think back on the top of my head. Okay, what was the A plus buying setup? What did any A plus buy setup I ever took have these type of lows here? No. Okay, so we're this close to a wick low, a very key sell side liquidity pool, right? I can't think off the top of my head many buying setups that I was confident in this and buying, but on a short-term basis, sure, I can scalp up into the buy side liquidity like I was mentioning to you guys, but I'm not going to try and do any type of long-term trade when we're this close to a key liquidity pool. So we aggressively drop down, take the sell stops. What did I tell you guys on the opposing end? Where does everyone stop and get trailed? Right above here. Okay, so I'll go ahead and put that annotated here. So, the key here is, can we roll past this Fourier gap here? Because if we do that, that's kind of rocket fuel to send it above the short-term buy side liquidity here, all right? So we'll see if we can have that happen. Now, remember, ES failed to take a low. We just completely ran right above the gap that I just mentioned here. So we come down, take the rejection block, work in the wicks here, and, not really willing to displace. So what do? We stay on our toes and wait. So like I said, the only way I'd be looking for this buy side liquidity to be engaged with that, great deal of certainty in the entry point. I would need to see us roll past the gap and the up close candles here. Okay. I don't need any body closure above it. Okay, I just needed one simple tick above the bodies here. That's it. Notice how the daily time frame is kind of consolidating right at, leaving the buy side liquidity intact here. That's not random. Okay. They know a lot of people are confident in these highs being ran out, so a lot of times, this kind of sucker play will instill in price. So definitely not surprised by this whatsoever. So like I said, by the end of the week, I definitely could see some type of thing play out where we just pierce below the lows here, accumulate, and then distribute above the engineered highs. So I've seen that more times than I can possibly think of, and I believe we will see that by the end of the week. Now, I don't have to be 100% correct about that to make money. You guys know the deal with that. It was just a couple weeks ago where, I was looking for one direction, and by the end of Monday, I identified that I was incorrect, and we were able to switch narrative and adapt to what the market was truly doing, and able to capitalize on that to make money. So you see how that works? You're not marrying a bias, you're not sticking to it, you're not egotistical and requiring yourself to be right on the first go. All right. Now, also notice with the sell side liquidity I mentioned. Okay. Obviously, we can all see that we worked in well past half of the wick here. So, okay, well past that. Also, another thing to note is this breaker that was created on Friday. Excuse me. This breaker that was created on Friday. Low, high, lower, low, trades above. And when we reference this, we see that we just traded straight through it here. Okay, so that right there is a bear signature in and of itself. And then you can even scale down and reference the 15-minute wick. Okay, you'll see that we tag that to the tick. So yeah, it's not giving the willingness that I would typically look for if it's going to go against those who have their stops trailed initially. So whenever I see it kind of hang around like this, I start to think that it's just going to continue lower. So to meet the criteria for me to have a high probability entry point, aside from anyone else that might be streaming right now and they're just we're trading lower, and let me take a stab at this. I'll try this one out, see if it works out. I hear that same sentence a lot, and I don't get it. Like, why are you playing a guessing game, especially when people are watching you? Like, why are you saying I'll try this and see if it works? Like, I don't know, guys. Anyway, if we trade above the short-term buy stops here, then I have something. But if we just keep dumping lower, then I'm just gonna have to wait for the sell side liquidity to be engaged, and then I'll look to use model 3. Okay. Very simply put. All right, so I like how we kind of tapped into the upper end of that wick there. We're beginning to trade higher. Now, like I said, I'm not going to be convinced unless I see like a real sustained run attacking opposing order flow. Okay, so you guys know the deal here. Okay, there's very specific things that I lay out, and once it happens, then number one, I can look to capitalize on it, or if it just trades above here and then just shoots straight up into it, well, then I look for the other idea, which would be a potential shorting opportunity once we tag the buy side liquidity. So basically what you're clearly seeing here depicted and shown to you guys is not impulsively jumping in where the majority of the crowd is, which you never want to do. Like, sometimes, yes, that can work out. Like, maybe it'll keep flushing, yes. Sometimes that can work out. I'm not saying it's never going to work out, but why would you want to take the gamble on that, right? The probabilities would be more so in your favor when you're not following the crowd, because what is the majority of the crowd doing? Losing money, okay? And that's not me trying to bring a negative cloud down onto you, right? It's just the truth. It's the reality. That's why I share my voice, because I know that's the reality, and I'm going to do my part in bringing traders on the correct path rather than the large swamp of fraudulent activity on that we have in our trading community today. But anyway, back to the 5-minute chart. Not really seeing anything significant on the 1 minute. What I see here is we worked up into that Fourier gap, respect to the old opposing low here with the bounce range, like I explained to you guys real time. We wick away from that, and now we're kind of working up into these up close candles here that were formed. So like I said, I want to see a very easy to see displacement, but as of right now, it looks like we're just more so struggling to get through. So So yeah, ES kind of entering a tight consolidation. So anyone that was jumping on the 10 a.m. news driver impulsively, like uh, they're in a little bit of profit here, but they're definitely losing some mental capital unnecessarily, which is honestly just as important. But I mean, like, think about it. When you're in any given session, the more mental capital that you waste on that session, especially early on, that just kind of chips away at your willpower for the given session. So you're kind of just like you're kind of just like taking that power away from your brain as the session goes on. By the time like a real setup comes up, maybe you don't perform as greatly as you would have if you would have preserved that mental capital. Okay, I hope that made sense because that is something that holds true. Okay, let's go back to Dow, see if it did anything. Okay, no. Dow just looks like Monday yesterday, to be honest. So, um, yeah, obviously today is a lot more promising, particularly London session. Obviously, we sleep during that time, so we're not going to look at that and be like, oh man, I should have been a part of that. No, because we simply are asleep during that time. We trade very specific sessions, the PM and the AM. Now, this is what we sat through yesterday. I want to remind you guys where we came from, all right? Just so you can compare and contrast this yesterday, which is never typical price action. Okay, let's be real, but this doesn't happen a lot. But this was absolutely seek and destroy. A lot of people lost their accounts. I don't know why, because this is honestly just very easy to see that it's just not something you want to trade. But anyway, that's what we went through yesterday. We were here live for about 5 hours, 4 hours. Yeah. But anyway, price already looking a great deal more promising. We're having real price swings, okay, real movement. And like I said, just take all this and stack that up with yesterday. So, like I said, the narrative that's kind of underlying here is we trade beyond midnight opening. We fail to get to the buy side liquidity, so I view this as engineered buy side. Intermittent term high here formed. Another intermittent term high here formed, followed by displacement in the direction of sell side liquidity. Okay, so like I said, I would wanted to see this 15-minute imbalance be left behind. If you guys remember, I mentioned that would be left behind in 12 minutes, and here it is now. So it looks like it failed. It looked like it was gonna rally up there initially, but it just failed by about 1 point. So is what it is on that one. So remember, notice what my main idea this morning was, right? Short-term buy stops up here, and I was looking to see if I can scalp up in there. And I told you guys a very specific criteria that would have to be met for me actually to scalp up into there. Did that take place? No. So guess what? I didn't take the trade. So what would have happened if I would have impulsively bought in on that too early? Well, obviously I would have been, getting ready to get stopped out right now. All right, DXY beginning to push up on a short-term basis, right up into this 15-minute fair value gap. Honestly, I don't think Darnex would have done all this if it's not going to sell off towards these sell side liquidity lows here. Okay, market structure's obviously pointing its hand lower on DXY, so I would anticipate DXY to continue to sell off. So now, regardless if we take a trade today or not, I absolutely, with 1,000% certainty, know that Monday and Tuesday here are absolutely setting the stage for great things to happen this week. So we have liquidity pools being engineered. We have real movement in price. We have that volatility still, which was great in August, which allowed us to, obviously make respectable returns. But we're heading into October, and we all know what that means, right? It is fall time, and we all know that fall and spring usually always yield the best price action. I don't think there's been any year within my trading career that fall just hasn't been very, very clean and a great read on the daily chart. And if there's a great read on the daily chart and we can navigate it easily on the daily chart, then you can bet that there's going to be a good amount of money being made, because being in sync with the daily chart automatically revs the probabilities through the roof. All right. Now, if we look at the daily chart today, okay, what do we see? Well, we know that we have buyer side liquidity hovering above here. So this daily array has yet to be hit. And we see that we're consolidating, right? We see that we just ran above previous daily high right here. Okay, pierced above that there. And we fail to get to that daily objective, right? So by definition, we should still be bullish because we have this untapped array. But what I'm seeing here is previous daily high being rated and potentially wants to revert down to these clean daily lows here before it runs up into that. So this is kind of like when it pulls the rug out from under the, the ones that want to keep seeing this thing rev higher. So you can kind of see it. You can see it a little bit cleaner on the 4-hour chart. So we run up above previous daily high. Engineer stops here. And then we have a clear liquidity pool resting below these two lows here. And then we'll see that on NASDAQ as well. All right. And also notice once we reverted back to new week opening gap, okay, did we stop at it right away and then reverse? No, we traded straight through it. So that right there obviously would be a bearish signature in my eyes. So lo and behold, this initial 10 a.m. gap is holding and it's sending us lower. Not in the best fashion in the world because we're very much so back and forth, but now we're actually getting directional to the downside. So I'm going to go ahead and map out the half of this hourly wick here on ES because I believe we're approaching it. Yes, we are. So wicks, it's not complicated. We use it exactly how we'd use it for rag gap. The high, midpoint, and the low. Okay, it's the same exact thing except it's just a wick. Okay, they're both inefficiencies. Okay, so this green line will be annotated as midpoint, this wick here. So we're touching that right now. Boom, to the tick. And getting ready to encroach upon sell side liquidity here. So, like I said, if this thing just keeps going lower, what do I have to wait for? Well, I just said we just have to wait for sell side liquidity to be ran. And then what I'm going to do is I'm going to look to engage with Model 3 and go against those who have been selling. Okay, that's exactly what I'm looking for today. And that pans out, I'm absolutely going to be pushing the button. And it'll be a good day. But if it just keeps revving lower, there's really nothing for me to do. Okay. Now, with this said, I want us to keep going lower until we, at the very, least requirement, it needs to pierce below the sell side liquidity here. As we're rising down, number one, into this rejection block right here. So these two clean bodies here, extend that out. Okay, that's a run on the liquidity with the bulk of the volume being in terms of liquidity at these bodies. And then we're trading to the tick down to midpoint of the wick. So we have a key opposing array delivered on ES. We have internal stops taken here. And as for NASDAQ, like I said, I want to wait for us to drop down and complete the run below the low. And what I'm going to do there is I understand there's already, okay, I know that there's stops trade above here and here. A lot of them, do I know the exact number? Absolutely not. Do I need to? No. Okay. So we had a real shallow run below the low there. I'd like to see it pierce above that a little bit more. Okay. Typically when we see a run below it, like technically, yes, we swept the low, but I don't really like seeing that shallow of a run. Okay. That's just a preference. Okay. It doesn't have to, be perfect, but a lot of times I like to see a little bit deeper of a run below it. But we'll study what we do now that we have actually swept that sell side that I wanted to be swept. All right, so we're immediately displacing up after reaching that, and then remember, to the very tick. That's actually rather clean there. Trades right to half of it there. Following that, we just displaced above this opposing down candle. So that to me I view as a change of state delivery only because we traded to that key level. Now, as for NASDAQ, what's going to get me enticed to really do something with the trailed stops here and here? Well, first of all, I need to see an upset in order flow, meaning we trade above with clear displacement above this opposing up candle here, because in a bearish market, all up close candles should be respected as resistance. So if we just expand straight above here, then I'll look to buy in on this on a short-term basis and get covered up here. All right, there we go. So we just poked above the up close candles high now. So what I'm going to do is I'm going to hunt an entry point on the NASDAQ micros. Now, is there anything in here that I'd enter on with this? Is this a displacement like that I'd like to see? No. So I need to wait. But with that said, now that we're trading above the body here, this automatically transforms into a breaker. So what I'm going to do is I'm going to take this and I'm going to extend this to the right side of the chart. All right, beautiful. So this is all that I needed now. So any little short-term retracement, I'll be buying in on that. And like I had mapped out on the regular NASDAQ, okay, that's what I'm looking at. So win or lose, this is exactly everything that I needed to see. Okay, risk is always going to be realistic. I'm never going to be risking more than I'd be willing to lose. I'm never going to risk significant profits. None of that. Okay, we follow the plan. We look for what we want to see, and we engage with it. Very simply put. So if we wick down to the breaker here, I'll go ahead and buy that. So any drop down into there, I would buy, right? And stop loss will go below. And let me missed it by a tick. Come on. Come on. Oh man. That's like a mental buy limit that was missed by a tick. Oh well, it doesn't mean it's done yet. It still can give us a short-term retracement. We'll see. Okay, I'm not gonna impulsively buy in on this and then have a wider stop loss than I'd be willing to have. Okay, that's just stupid. And you know, if it doesn't give me an entry point, it is what it is. But you guys can clearly see the market's being called to the tick regardless. All right, so actually now on a different basis, I would actually move this up. Okay. And this is also a breaker because we have a low, high, lower, low, run on stops into a key level. And then this up candle, I would reference that. So this can yield us another entry point. Obviously, this here would be preferred because it's a lower entry and it's a lower risk buy. But this will have to do, I guess. So like I said, win or lose, every single thing that I said I wanted to see before the fact took place. I have all the working parts needed to engage reasonably with the trade. And that's what we're working with, okay? So I'm going to take half of this breaker here. What I'm going to do is I'm going to pull the range right there. Because really, the upper 50, in this type of scenario, the upper 50% of the breaker should be held, okay? All right, so I'm going to wait for it to drop down to this 1 minute fair value gap here. So if it drops down to the 1 minute fair value gap and the breaker, okay, that right there is absolutely a buy. So it did not quite pierce into the fair value gap there, but once it does, I'll buy. And there we go. All I need is one ticker down into that. Okay. Stop goes below. Take profit goes above. So we're targeting the trailed buy stops. Obviously, you know, we'd prefer to get a, you know, a little bit lower entry down here, just to not fill us with the breaker. Okay, so I would have bought here, right? Stop loss would have been below, and we already would have been in profit and position to take partials. But, you know, we're working with what it gives us, and this is what we're rolling with. So, like I said, no matter the transaction, okay, we understand that no trade is guaranteed 1,000%. Okay, that's why we use reasonable risk management. That's why we use stop losses, all that stuff. It's a great tool, okay? But regardless of the outcome, this is absolutely everything that I would require to get me engaged with this marketplace, okay? This looks entirely too clean for me to not take, okay? This is a no-brainer, and here we go. Also note, not even just the buy side liquidity, like I'm also targeting this time-based gap here, okay? So very specifically put, this right here would act as a magnet. Okay, ES getting ready to engage that buy side. Beautiful. Beautiful expansion there. Beautiful. This is what every trader wants out of a entry point. Just expand right away from it. Like I said, the preferred entry point would have been getting filled at this breaker here. Okay, with that mental buy limit, but you know, it is what it is. Now what happens now? Oh, we have an initial expansion. Does that mean I aggressively trail my stop up? No, because the transaction is not finished until it's finished. Just because it's going in the direction and looking promising does not mean, you know, it's guaranteed to shoot straight up. Okay, sometimes you'll see it. You know, you have to weather a retracement. Okay, so I'm not aggressively trailing my stop up. That's another form. Even though technically, yes, you're risking less money, it's another form of poor risk management. Okay, so if you're scared to lose money, honestly, in this game right here, you're more likely to lose money if, you know, that's your mindset. So it looked like it was going to touch the very high of this down candle, which I would view as reaccumulation. Now, given how close we are to the objective here, I wouldn't, you know, pyramid it on that, and meaning I wouldn't add more contracts there. Now, wait a minute. What's our dealing range? Remember, this high down to the low. Are we buying at a discount? Yes, we are. Are we aiming, or are we getting covered at a premium? Well, not exactly. We're getting covered right at equilibrium. Okay, very specific take profit, not some random price point. Okay, it's right in the time-based inefficiency above buy stops, right at equilibrium of our opening range to the low. So let's see if we can spike above there. And, well, one tick away from our take profit. Well, with how close we are to take profit stops, I mean, no brainer's going to break even here. So I just rolled one ticker away from TP. And see if it can flush above and complete the move. Looks like, yeah, ES did engage that buy side liquidity there. Gotta love the days where it gets one tick away from your TP and then roll away. Anyway, let me know if anyone took that, though, because, I mean, definitely a very no-brainer type trade that, you know, it's very, you know, we're in that right away. All right, I get it, NASDAQ. It was too easy of an entry, so you're going to make me work for it mentally a little bit up here. Just a little bit. All right, there we go. So that was about just under 50 handles there. I could see this thing going higher than this, but honestly, this is all I need. Okay, I already profited 100 handles in London. Like, I'm not gonna sit here and be greedy because this is more than enough. Like, listen, to put it in a good perspective, this simple price swing right here, literally, look, just zoom in and look how small this looks. It looks small, but this simple price swing, capitalizing on a price swing like this on a consistent basis, can absolutely hand you a career. A career, I promise you. You just have to not be greedy, and you know you got to know what you're doing, obviously. But lucky for you, you're in within the inner circle here, and I'll guide you to that. But like I said, just under 50 handles. I could sit here, you know, and try to get more, but at the end of the day, like I said, this price swing is all I need. Okay. But I mean, just look at the perfect. Like, I'm not trying to sit here and beat my chest any more than I would need to, but understand and look at this price swing here. Look, I got in right at the low, and what do I get covered? Right at equilibrium. So when we're looking at it at a PD array matrix type of idea, you know, just a fancy term for, you know, discount premium with arrays. When we look at it, we understand that I'm buying at a discount, and I'll be aiming for a premium array. What's the premium array? Well, I can't call buy side a premium array. We understand there's trail buy stops above here, like I've been calling out since the beginning of the session, right? But the real premium array would be where's equilibrium and what's above it. This unfilled portion of the time-based imbalance. And then TP was right at equilibrium, okay? Alrighty, so Ariel, Alex, Jacole, 762, and Brian. Good work to you, guys. I would very much appreciate it if you shared your executions in the main chat or the futures chat, whichever you want. I don't really care, but I would very much like to see you guys' executions along with mine. But anyway, without me saying it initially, you guys basically just saw a classic depiction of model number 3. So, uh, for those of you that have been with me a while, I pretty much just gave it away. But it's going to be releasing October 1st in the mentorship tab. And I'm basically just going to be laying out all the rules. So, like, what cancels out and what makes it valid. And when do we look for it. So, that type of thing. And I'm just going to cement it in one full video. Okay. But anyway, honestly, I could definitely foresee this thing trading a great deal higher here and actually getting above the highs here. With us trading down to this key level and the reaction that we had, and we're just facing through, like, we're not showing any signs of stopping where we got covered, right? It just facing through all the opposing arrays. Okay, we notice how we completely displaced through that time-based gap formed in London. And then as for NASDAQ, it's way too strong to this fair gap. So immediately my eyes already jump above these highs here. So do we need this at all whatsoever? No, because we already made money. Okay, so I don't have to be right about this, and you don't have to be right about this. Take your money, keep it, because understand. Okay, yes, it feels good. It's a good day. We all just made money. We took one trade, and that's it, and we leave it at that, right? It's a great day, right? But listen, now once we do this and arrive at this, it becomes a whole entirely new battle, and that means keeping the money that you gained and being content with it, because you'll start to take your profits like, oh shit, dude, man, I should have held, or I could have got. You get out your calculator. I could have got X amount of money. Take the money. It was a profitable day. Appreciate it, and be grateful that you can actually, pull money out of these marketplaces in the first place. Okay, so once we make the money, I'm trying to tell you guys, you have to handle yourself well emotionally, just like you would after a loss. Okay, it's just as important. Okay, that gives you a new perspective, doesn't it? But how you handle your euphoria after a win is just as important as how you handle anger, anxiety, whatever the other negative emotion is that follows a loss. Okay, so like I said, whenever you profit, it becomes an entirely new battle, and that is retaining the profits. Okay, so very good trade here. Okay, what I'm seeing here now is we just face straight through this time-based gap. I don't need a closure above. Okay, a lot of people say I need closures. I don't know why, because if you know what you're doing, you wouldn't need to require closures. Okay, there's granted there is specific uh environments for this. Particularly, I'm talking about the hourly and the 15-minute chart and the daily. Okay, that you want to look for closures, but when we're on the 1-minute chart and stuff, like I just don't require that more times than not. But anyway, as soon as we trade above time-based inefficiency, that immediately that's telling me there's rocket fuel for it to just send it above the opening range 930 high here. So basically, if it trades above time-based inefficiency, that's not enticing me to enticing you to chase it, but I believe there's like nothing less than a 95% chance of this high being booked if we trade above this, which I already think it's rather likely. But anyway, yeah, like I said, way too strong to this gap here. I wouldn't view this as a reversal point. I would like to see this thing really press higher. So what we're seeing on NQ is, first of all, we did sweep the liquidity there. It doesn't actually really look like it on the hourly chart. It looks like it just matched it, but it did sweep the low and a discount. So discount would be Friday's low to the high. Now, would I try to jump on any buys here with what the hourly chart looks like? Absolutely not. Okay, first of all, I want to see it roll back down and work in this wick. Okay, so if it were not to work in this wick, I don't care what it does. Okay, I'm not buying in on this thing because you guys know the rules. The rules say 80 to 90% of the time, when we have a large wick like this left behind, it's never favorable to buy in on it. Okay, you want to see the wick worked in first, and then you want to look to buy. Okay, so with that, let's go to ES. Okay, same exact thing. The wick left behind. We failed to take this low, so we now have what? SMT divergence, and we have internal stops taken, and we have new week opening gap redelivered. So this could all set the stage for us to finally complete the move above here, and I would anticipate that to happen in the PM session, to be honest. So, yeah, definitely do not chase the move. Understand we have a very large hourly wick left behind, and then we're also leaving behind these 5-minute imbalances that would clearly be likely to be worked in. Okay, so that's what I'll watch out for. But anyway, it's 11 a.m. So we just exited the New York kill zone. Okay, so I mean, you could classify this as, silver bullet, but I don't really look at it that way. I just look at it as we were buying it on the 1050 to 1110 macro, and we're targeting those who have been selling, and that's it. So, like I said, I'm going to have this model out in video format by October 1st in the mentorship tab. But other than that, I think I'm going to close out just simply because, we all made money, and the last thing I want to do is when we make money is try to entice people to give that money right back. Okay, so you take the money, you're appreciative of it, and understand I have to give you that statistic every single time because I understand if you're profitable on the day, you're automatically placed in the 5%, if not 1%. Okay, because most people come into the day and they lose money. That's not me, wishing that upon people. It's just the truth of the matter, and it's the reality. Okay, but other than that, like I said, be wary of that hourly wick. Anticipate that to be worked in before we see bullishness. Okay, it could just leave it open, but that's very unlikely. Hence why I said 80 to 90% of the time. It's not 100%, but your safest bet will be allowing that hourly wick to be worked in and then look for something. So what I'm going to do here is I'm going to close up and I'm going to get touch base with you guys in the PM session, and we'll be streaming should the markets act right at 1:30 to 3 p.m. So the PM session kill zone. Excuse me. I'm trying to think of what else I was going to say, but I can't remember. But anyway, it was a good session, guys. Take it. Don't fall victim to the guys that profit and then give it right back. Please don't do that. And yeah, that's going to close out here, and I'll be talking with you guys in the PM session and hopefully streaming. Okay, so thanks for watching, guys. Appreciate you. And yeah, take care of yourself.